Yo, what's good, everybody? Welcome back to the Day Trading Institution. I hope everybody has been enjoying the course so far. If per video as you go along, drop a comment on the video. You could actually do that, so I can just get some feedback on what you guys think about the content. Anyways, this is going to be the part 2 video. So in the first video, just a quick recap, we went over the different types of trends that there are within the market, the different market conditions, along with different types of breaks of structure and a 3-leg extension, which is a confirmation of a new trend. Now there's going to be a lot to learn in this video, so don't get overwhelmed. Like I said again, you're gonna understand these concepts later on as time progresses. But anyways, we're gonna be looking at the pair today, US 30 USD, which isn't necessarily a forex pair, but every single market, no matter what, will have a trending condition, will have different market waves. So going back to our original notes, right? If we look at the daily time frame, the weekly time frame, the 4-hour time frame, each and every single time frame has its own trend. Now, typically what you want to look for is the higher time frames. What is the weekly time frame doing? Going back to our notes, it's moving from, if I were to put it like this, the bottom left hand to the top right hand side of our screen, meaning that we're in a bullish trend. Now, obviously, when it comes down to like US 30 overall, this is a stock market index, which, roughly does 10% consistently every single year. So the majority of the time, this is going to be trending. Right now, this was obviously the crash during COVID. So, when the COVID-19 pandemic first just hit. But if we take a look at another pair like GBP USD, we could see that for the last few years, we have consistently been getting lower and lower and lower. For the last few years, since 2009, 2007, practically, right? But I don't want you guys to focus on, the bigger picture like this when we're identifying the trend. When it comes down to the weekly time frame, you simply kind of just want to look at, an area like this, really relative price. Now, I want to argue that this is all relative price in terms of supply and demand and everything else. Now, typically, when it comes down to specific currency pairs, they're going to be bouncing around a certain price range. So let's just say GU right now is bouncing around 1.6 thousand. Let's leave it out. GU's bouncing around between 1.6 thousand, which is support, which we haven't gone over supporting resistance, but you'll learn that later on, and resistance is going to be 1.44 thousand. So we know that our lows, our all-time lows are here, and our all-time highs are here. Now there's going to be trends within inside of a trend. Now, for going back to the last session, what does it look like price is doing here? Right? It's moving from the left side of our screen to the right side of our screen, meaning that price is moving sideways. Price is consolidating on this weekly time frame. Does that mean that you shouldn't trade this pair? Does that mean that you can't make money? No. If we break it down to a 4-hour time frame, we see trends within trends within trends. So again, I don't want to confuse you guys all too much. Let's go back to US 30 here. Typically, when you start doing your top-down analysis, which is our form of analysis, which we'll break down later on, you always want to identify the higher time frame trends, being the weekly, the daily, and the 4-hour time frame. And then, if these 3 trends are aligned, let's say the weekly is bullish, the daily is bullish, and the 4 hours in a bullish trend, then you're only going to look to buy. As simple as that. Now, let's go down to the daily time frame and actually look for some examples of these actual trends here. So if we go, actually, let's go to the 4-hour time frame, see a little bit more detail with price action here. Now, if we look at this 4-hour time frame, we could clearly see, clear as day, that price is making higher highs and higher lows. Now I'm going to mark that off on the screen for you guys. So let's start it here. So here we have a low, here we have a high, here we have a higher low, here we have a higher high, here we have a higher low, then here we have a higher high. As simple as that. Why is this current price higher than this specific price? It's literally as simple as because the price reached a higher range in the exchange. As simple as that. This is going to be considered a higher high because it's higher than this high. And this is going to be considered a higher high because it's higher than this high. This is going to be considered a higher low because it's lower than this high, or that it's higher than this low, and continue, so on and so forth. Then we have another higher low, higher high, higher low, and currently we are at a higher high point, as you could see in the market. Now we always want to wait for a pullback for another higher low to be formed and then wait for a higher high. Now for this trend to no longer be valid, price has to do what? Go back and refer to your notes. For those of you who've been trading for quite some time, we know that price has to break our previous higher low point. So price has to come all the way back down to this low right here, which is our previous higher low point, and break it. Once price actually breaks under this low here, we have now broken structure on this 4-hour time frame. And what do we have to do to confirm the new trend? Wait for price to pull back and form that 3-leg extension, which will confirm the new trend. But when it comes down to index pairs like this, it's typically a little bit more different because you always want to pay attention to where the daily time frame is also. Typically a break of structure on the 4-hour time frame means that price is going to be doing a pullback on the daily time frame, meaning that it is going to make a higher low for the daily. So if price is still trending bullish on the daily and it looks like this, where you just see a bunch of bullish candles, but on the 4-hour time frame you see actual market structure. If you see market structure break on the 4-hour time frame, then typically that means price is going to do a pullback on the daily time frame, which you could still make money based off of those 4-hour breaks. And you could definitely intraday just the 4-hourly trend. Now, typically, when you're going to wait for a pullback only on the daily time frame, you're typically just going to be swing trading. But we're not going to get into the probabilities of where we should expect pullbacks to end. Well, actually, we could. But I just kind of want to go over the basic principles of understanding the trend and where the market currently is. Now, let's take a quick look at gold here, because I feel like gold is also very important here as well. So if we look at gold on the 4-hour time frame, we could see that there is a small bearish trend here. Now, if we look at the daily time frame, we could see that recent price action from October 1st all the way till today being November 5th. Right, price has just been moving sideways. It hasn't really gone up a lot, hasn't really gone down. It doesn't look like this. This is an entire trend here. This is another trend here, right? So, trends are going to look very, very differently, and you're only going to get better at spotting trends and where price could go as you progress in your trading. But this is literally a whole bullish trend here, and then here's a bearish trend, and now it looks like it's going to continue this initial bullish trend. Now, if we were to take a look at this bullish trend, keep in mind, you have to remember, right? Higher low, higher high, higher high, higher low, higher high. This bullish trend is not over until this previous higher low is broken, which is this white line. Now, yes, price went under it a little bit and formed a lower price, but we still closed above the previous higher low, making this a simple low. And then now price has made a higher high, which again, the trend is still valid unless it makes a lower low or a lower high. So when it comes to this trend here, if we look at the 4-hour time frame, right, we know that we're still bullish on the daily time frame. But if we look at the 4-hour time frame, we could see a whole bearish trend here where the market's making lower highs and lower lows, and then price pulled back to its original lower high, but then faked out and continued trading higher, making a higher high. So now we've broken structure on this 4-hour time frame, and we know the daily is going to continue. So in a situation like this, you just want to wait for price to pull back to a previous level of resistance, being here in this case here, so 1800, let's call it, for you to look to buy again. And we're only going to look to buy. Why? Because price is making a higher high. Now again, we want to wait for the pullback to a certain level, and then price can make that 3-leg extension. But keep in mind, there's a lot of levels here that price is gonna, go up and reject. Now let's take another look of an example of a different market structure here on this 4-hour time frame. Right here we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high, break of structure. Notice how when price broke this previous higher low that we have here, notice how price came all the way back up, retested, formed a lower high point, and then continued to trade lower, making that three-leg extension. What happened after that three-leg extension? Price pulled back yet again, lower high, and then lower low, then a lower high, lower low, lower high, lower low. Then look at this, break to the upside, higher high, right? And then price kind of just consolidated and moved on from there. So again, you know, if I spoke maybe a little bit too fast, or you don't understand higher highs and higher lows, you need to go back to the previous lesson and keep practicing your higher highs and keep practicing your higher lows. Now, let's take a look at another example. Let's look at GJ here, right? Now, notice how price overall was in a very, very, very strong bullish trend, right? Notice how price went completely bullish and then broke this previous low that we have here. Now, notice the market structure after that. Lower high, low, lower high, lower low, lower high, and then price went all the way back down to make a lower low. Now, if you bump up the time frame, what does this look like? This simply looks like this, where price started consolidating, high, low, high, low, high, low, higher high. That is the initial break of this consolidation range. And if you go back to the previous examples of the consolidation ranges, you've noticed that every single time I've made these examples, I've marked it off so price pulls back to its previous consolidation range where you could look to buy again. Now, that doesn't mean you can't sell with this 4-hour time frame, because a 4-hour time frame is a very big time frame, right? You could have made a potential 300 pips, 280 pips, let's call it 300 pips with this sell right here, and know that your target could end over here. This should have been your target, right? Again, I'm not really trying to go into the schematics of trading all too much, just because I want to keep things as simple as possible. And later on, we'll go into more in-depth breakdowns. But notice how we have this consolidation range here, right? Notice the break where price made a higher high where it broke above the previous high, making this a higher high. It is higher than the previous high being here, right? Now notice how price came all the way back down to retest. So now that price is within the highs of the consolidation range again, let me mark it out for you guys, right? Is within the highs of the consolidation range. What can you expect now here? We can expect price to simply go long. Now we'll get into buying pressure and selling pressure later in the future. And again, we're still learning the basics here to kind of just tie everything down together. But this could be the first leg or the second leg completing within the 3-leg extension. We only need one more leg to go up to confirm this bullish trend. But at the same time, we don't have to wait for this bullish trend to confirm that it's still a bullish trend, because we've already broken above these highs and pulled all the way back down. We can kind of almost expect the third leg to form. And that's our goal as a trader, is to try and hypothesize where this second leg in this 3-leg extension will form. Because again, remember, 1, 2, we're in the middle of the 3-leg extension. Our job as a trader is to hypothesize where this second leg of the 3-leg extension will form and try and catch the third leg so we could capitalize on the third leg. We're not buying in the middle of the first leg. We're not buying in the middle of the second leg. We're buying before the third leg ends, which you're trying to hypothesize when the second leg will end. And that's when you're going to start looking to take buy positions. It is as simple as that. Now, if I break this down to a 4-hour time frame, I'm trying to find an example here of a break of structure of the 4-hourly time frame of a nice clean trend. But the problem with trading is most of the times markets are going to be moving sideways. Notice how markets are going to be moving sideways here. Markets were moving sideways from July 21st all the way to October 1st. Right, so you're talking about months of price moving sideways. Does that mean you can't capitalize off of these trades? No, not at all. Right, every time price came to the highs, you could look to have just gone short, and every time price came to the lows, you could have looked to buy. This is a huge pip range. This was a pip range of 400 pips, meaning that if you would have sold price from the high, and if you would have sold price from the high and closed that sell position from the low, let's just say you were throwing 100,000 units or one standard lot, you would have made $4,000 on this position. If you would have done 10 lots, you would have made $40,000 on this position. 100 lots, you would have made 400 grand. So again, there's just different levels when it comes to trading. Now, I'm going to be expecting everybody to be in the beginner level, so I wanted to just really quickly talk about the possibilities that yes, this is possible, but you have to solidify your mindset and solidify your trading skill set before you can even think about touching those numbers. I'm telling you, it takes a very long time to build your mindset to be able to really focus on making those bigger numbers. You have to start off with your $100 days and 200 and 400 and 600, then 1,000, then 2,000 and 3,000, and you slowly work your way up. It's again not a marathon. It's not a sprint. It's a marathon when it comes down to trading. So I'm really trying to look for a good example of a bearish trend here. I guess I'm gonna use a small bearish trend here, right? So let's just look at another break of structure here, right? So here, let's just start from here. We have higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. Notice price came up for a pullback, and then we have a lower low here. Notice the three-leg extension where price went from a higher high to a lower low to a lower high to a lower low. This is a confirmed bearish trend. Then watch, lower high, low, break of structure, higher high, higher low, higher high. Then again, break of structure, lower low, lower high, lower low, lower high, lower low. And then we have another break of structure here, higher high, higher low, higher high, low, higher high. It is simple. What I want you guys to do in the community and everything else is I want you guys to find a random chart like this and mark off your higher highs and higher lows. Send it to me, send it to everybody in the chat so they can review, they can critic. Now, everybody's gonna have very different points of where their higher highs and higher lows are. As long as we all have around generally the same concept of what higher highs and higher lows are, that's fine. Because somebody could consider this to be a lower high, then a higher low, then a higher high. I wouldn't consider this to be anything. I'd just consider it to be the middle of a pullback. But that's basically the basics of looking for market structure and identifying market structure. So some key takeaway notes for you guys is identify what the trend is on the weekly, the daily, and the 4-hour time frame. If the weekly is bullish and the daily is bullish and the 4 hours bearish, then that should be like, hey, I'm going to wait to just look to go bullish on this pair. I'm going to wait for that to set up and then look to go long. So hopefully you guys did understand this lesson. Hopefully, if you guys ever have any questions, just feel free to contact me and I'll talk to everybody in the next lesson.